Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we've got lots and lots to get through. So let's not waste any time. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, we're going to begin with the inflation figures that came out last week. As you can see, the actual estimation was 6% and it came in exactly at 6%. So that was obviously totally expected. And this week, that led to the Fed actually increasing the rates by 25 basis points. Once again, very much expected. So the question is, why is it that on Wednesday at 6:30 UK time, when the Fed announced the 25 basis points interest rates increases, why did the market do this? Which was completely unexpected. Your guess is as good as mine, so I wasn't expecting this to be happening, although you would expect volatility to occur when there's major decisions being actually announced. However, whilst the inflation figures were expected, the 25 basis points were expected, the markets should not have really done this, but this is Bitcoin and this is the Wild West, and this is the kind of thing that happens. One theory is that the market takes an opportunity to shake people out, and this is exactly what it did. It shook a lot of people out. Those who were impatient, those who don't want to look at the 2 to 3 year time period, they're the ones who get shaken out by these little movements. And I did notice that quite a number of YouTube channels on the Wednesday, when they made the videos after this rate hike, went very, very bearish and said, look, we told you so. And they're really still in the bearish camp, and they still think that we've not bottomed out. And they may well be right, but the actual facts on the ground tell us a different story. I suspect the Fed will find it very difficult to now raise interest rates in the next few months. Of course they can do so, but they do risk quite a lot of contagion from the banking crisis. But we'll have to wait and see. But I suspect in the next few months, it may well be that there are no rate increases to allow the economy to catch up with all the rate hikes that we've had in the last few months. It was also interesting to note on the dollar that while the markets were spooked, the dollar also came down, whilst we would have expected a contrarian move. So since this weekly candle over here, we would expect, just like when we were up here, and I mentioned at the time that we can expect the dollar to now be going further down. Here, it's exactly the same. We've now come to a support line over here, but when you zoom out, you'll see the bigger picture on the monthly chart. Just like back in 2002 over here, we were on a multi-year bear market in the dollar, which culminated at the bottom around the mid-2008. So we had a 6-year fall of the dollar, and it looks to me that we're on another long-term stretch down here, at least for the next 2 to 3 years, which obviously plays into hands of the markets and Bitcoin. I want to give you some insight into the inverse head and shoulders that I've been talking about for many, many weeks now. So we had the neckline exactly at the 25,200 level mark here, and the next level is at this cluster of price movements over here at around about 32,000. And as I showed you last week, that's all to do with all the price action along the way historically back to 2020 over here. Now what's really interesting here is that as you've been watching my videos, you'll know that I was expecting the left shoulder here and the head, but with the right shoulder being a bit more symmetrical in relation to the left shoulder over here. And when you get a stunted shoulder, just like this one here, where it didn't allow that shoulder to form properly, it should have really formed around here, with a much more rounded bottom here. So not many people really follow these types of inverse head and shoulders and what have you, but they are actually one of the most powerful patterns in the whole of classical charting. What I want to actually let you know is that my own view on this stunted right shoulder that we got over here, what it spells for me is that there is desperation on the part of the larger buyers, that they were not willing to hang around for the shoulder to develop on this side here. And that desperation will manifest itself up here. For me, this is giving a clue that with a lot of buyers who are desperate to buy and get on board the Bitcoin train, it may well be that we may see all-time highs over here before the next halving. And as I've shown you in the last few videos, the 4-year cycles, generally speaking, before the next halving, we very rarely get all-time highs. They usually occur after the halving. But this little move here by the whales, by the bigger buyers. There's a huge amount of desperation going on here. And I feel that we need to keep an eye on this, because while we think that there may well be a big correction at the $40,000, $50,000 mark over here, this move by the bigger buyers tells us that there is a very good probability, and it's all about probabilities, not certainties. There is a good probability that once we get past this 32,000 resistance point, instead of finding very strong resistance, this may power through all the way through to the 69,000 and start making new all-time highs. We'll see how it gets to there, but we certainly need to keep an eye on this. And that's all to do with this little move over here, which has prevented a symmetrical right-hand shoulder on this side. A quick look at the weekly chart tells us that we were in this channel over here, which I've drawn for you in the last few videos. And what's happened is that we've actually gone above this channel and now suddenly found support at the top of this channel over here. So as long as we don't fall below this top of the channel line here, the support line, then we should be good to go actually much further up. And if we have a look at the various exponential moving averages, you can see that the 8 exponential moving average over here, the blue line, the 21, which is the yellow line, and the white one, which is the 34, we can see that the faster moving 8 crossed over the 21 and has now crossed over the 34 as well. So there's a huge amount of bullish sentiment going on over here. And not only that, the 21 is also about to cross over the 34 exponential moving average. And the reason why that's important is if you go back to the previous cycles, and I'll go back to the one in 2018, where these lines crossed over here, that was the biggest momentum that, having bottomed out, we were now onto the next rally all the way up to the top. In this case, it was 14,000. So what we're really doing is we're going towards the first peak that normally comes before the next halving, which is going to be in May 2024. So not many people on the YouTube has picked up on this, but this is where all the crosses are occurring. And when they line up with the 8 at the top, the 21 below, and the 34 below that, that's when we get the big move to the peak that we're expecting around the $40,000 and the $50,000 mark. So on the weekly chart, looking very, very bullish, everything's going in the right direction, and we're aiming for our first peak before the next halving. And if you look at the daily chart, those 3 lines have already started back here when we moved out of these 3 ranges on the 13th of March over here. And since then, we're just finding support on this 8 EMA. So currently we're still well above it. So that is still signaling that we're in the bull market since we bottomed out at 15.4. And if we have a look at the 60-day cycle, we can see quite clearly that we're having a natural resistance from these points over here back in May 2022. So if you put a ray over here, you can see quite clearly that we are coming right up to this. So you would expect a certain amount of consolidation in this time period here. And as I mentioned in the Twitter page, when I was mentioning the outside bar candle, on this chart here, that Bitcoin now finding support on the upper ascending channel, the current daily candle is turning into an outside bearish candle. So a retest of the 25.2 looking increasingly probable over here. So this was the chart I showed on the Twitter page. So I wouldn't be surprised if we came down to retest the 25.2 before making a right translated cycle after the midpoint, this white dotted line here, before we go into the 60-day cycle low over here, which would be around here, around the 9th or 10th of May. And the important thing is, if you notice, we're making higher highs along the way. And if we do a right translated cycle over here, that would be another higher high on this trajectory over here. So if we have a closer look, you can see that the new cycle started over here on the 10th of March when we bottomed out here. And if I move that line, you'll see it more clearly. We bottomed out with this candle, the bottom of which was at 19,569. So currently we're on day 14 here. So quite a way to go to the midpoint over here around about the 9th of April. So expect a few more oscillations along the way, and we may even have one flush out down to these levels down here at 25,200 before we move to the upper side. And certainly after a big move in the last 12, 13, 14 days, we would expect a period of consolidation really before getting the energy and creating some sort of a base over here to move to the upside over here. So if we do get a consolidation, the main thing is not to get panicky that this is now on the way down, because that may well not be the case, as I would expect this is a continuation pattern to the upside. And you can see quite clearly the outside bar red candle over here. So what that was saying was there's an exhaustion of buyers to the upside. So this normally would bring the price down, but as you can see, the price hasn't really made much of a difference to the downside despite what's happened on Wednesday. And that's giving us a clue that instead of coming down, it may well just consolidate sideways before we see a big move to the upside on this continuation pattern over here. A little bit about my strategy, what I'm up to. Please remember, this is not financial advice, so please always do your wider research before you make any investment decisions. I can only share with you what I'm doing, and there's lots and lots of different strategies which all lead to the same conclusions, i.e. we can all do really well, but we can use different methods and different roads to actually get there. So I'm just sharing with you my strategy of what I've been doing. So I mentioned to you in the last video about my strategy over here when the market was bottoming out over here, and I moved 75% of my funds around the $17,000 mark here, because as I showed at that time, many averages from the previous cycles were showing that this was the point that we'd bottomed out. But as I said, that because this cycle doesn't seem to be exactly the same as the previous cycles, then I would leave a room of about 25% just in case if we made another move to the downside, which is exactly what we did over here with the FTX scandal. And I still believe that when the FTX scandal broke over here, that if it hadn't broken, we wouldn't have gone down to these levels down here, and that this point at 17,000 would have been the bottom. So I was expecting the market to take off here, and once we reached above the 18,300, I would move my 25% of the rest of the funds for my long-term portfolio. I would have moved them in at this point. But I got lucky in the sense that I left those 25% for a move to the downside below these levels here. And I duly got these, and so I moved my funds of the 25% down here. And if you've been watching my videos, you'll know that those are the things I was discussing at the time, and I did quite a number of videos about a warning to the bears that be careful. The more you expect it to go down here, the more you'll get caught up going to the upside here. So it was a good idea to dollar cost average in at these points. So my strategy at the moment is that we are really at the beginning of a 2 to 3 year bull market run, just like the previous cycles. And when you're at the beginning, it's very easy to get caught up with the emotions of the previous bear market. So when you see a big move like this to the upside, it's very tempting to take profits, because there is always that danger that in the past, like it's happened here in the bear markets, every time we have a counter rally and everybody thinks that we've now bottomed out and we're going to go much higher, we find this happens. And then once again, another counter rally, and then this happens. Another counter rally, and this happens. Another counter rally, etc., etc. And what the market does there is it drains you out of your emotions, and it raises certain expectations of the market. And it creates a certain pattern in your mind as an investor that every time we have an uptrend like this, we will get a big counter bear market here. So every time we go up, everybody thinks that we're going to go down, and obviously we're going to have corrections along the way, but it's not going to be to lower levels below the bottoming out process that we've already gone through. So now that we've gone up here, a lot of people are selling and leaving their positions. So my strategy is that I'm very careful that I don't want to be out of position. So I'm holding on for dear life. Please remember, money moves from impatient hands to patient hands. And those who are patient along here will get rewarded up here. But those who are impatient over here, thinking that the market's going to come back down, they're going to get punished, because that's what the market does. And I would always refer you to the previous cycles, because we are really following very similar cycles to before. So if I take you back to 2011, 2012, we had this bear market down here, and this created the same conditions that we've got currently over here. So basically where we are at this point. So my position is, my strategy would be, why would you try and lose positions when you can quite easily ride all the way up here for the next 2 to 3 years? Similarly over here, once we got out of the bear market, this is the position we're in over here now. And once again, if you have a 2 to 3 year view, you will be able to ride this market to the top over here. And similarly, when we got out of the bear market in 2019, once we got back up again, we had another year and a half of the rising market over here. So we now find ourselves exactly at the same points as we did after the previous bear markets in the last few cycles over here. So all I would say is that please don't lose your position, especially at the beginning of the next 2 to 3 year part of the 4-year cycle. Because what tends to happen is that when you sell over here with the expectation that we're going to get a pullback, the market instead moves to the upside here, and you lose more of your units. And what you tend to do then is try to recover your losing positions, and in the process of that you end up losing even more. So here we are, having topped out at 69. We've had this bear market down here all the way down to 15,400, and we're just now moving into this rally over here, which is really the beginning of the next 2 to 3 years of an uptrend. And as I've been mentioning in the last many videos now, that the two levels that I'm looking at, and obviously these are all to do with probabilities, that there is a high degree of probability as far as I'm concerned, that based on the previous historical context of what Bitcoin does, we're going to come either up to here at around about 50,000, 48 to 50,000, or up to this $40,000 mark before the next halving in May next year. And if you wanted to take some profits off the table, these would be the best points over here. These 2 points at 40 or 50,000. And what I'm planning on doing, and please remember this is just what I'm sharing with you, I don't expect other people to follow suit. You'll have probably better strategies than me, but my strategy looking at this would be to take about 15 to 20% off the table over here so that I can benefit from the profits that are going to be available at this point. So if the market does come back down, then I can accumulate a little bit more at about 10, 20, 30% lower down here, depending on how far the market comes down. And if the market does go back up to the $50,000 mark, I may then take off another 20% off the table, because more than likely, with a high degree of probability, we will more than likely have a correction to the downside. And the $25,000 mark here would seem a natural place for it to come back down to. If we went to 50,000, that would represent around about a 40 to 45, 50% fall down there. And that is in line with the previous cycles. But to be on the safe side, I would more than likely buy back around about between the 20 and the 30% mark. But I am actually mindful of what's just happened over here. As I mentioned at the beginning of this video, this desperate rally may mean that we go past this $50,000 mark and make new all-time highs past the $69,000 mark. So only time will tell, but these are my thoughts I'm sharing with you. So please do your wider research, listen to other people that you find confidence in the other YouTube channels, and then make up your own mind. And as you know, I'm mostly invested in the Bitcoin miners, and I'm expecting a very big surge in the Bitcoin miners because corresponding prices of the Bitcoin miners currently with the price of Bitcoin in the last year or two has meant that there's a gap developing, because the Bitcoin miners are a leverage play. So whenever Bitcoin goes up by 1 or 2%, they go up by 7, 8, 9%, and in some cases 13, 14% higher. Some people actually ask me, why am I into the Bitcoin miners as opposed to the altcoins? And quite a number of people do request that I cover the altcoins. And this is the reason why I don't want to cover the altcoins anymore. And I don't have any altcoins now. If you look at one of the sexy plays on the altcoin stage, that's the Cardano. Everybody mentions Cardano in virtually all the altcoins. And I want to show you something very interesting. When the market was at the bottom in the COVID situation in 2020, if you take the bottom of that to the top of the bull market that we got, that was around about 180x. From the bottom at the COVID situation to the top of the bull market. That's with Cardano. And this was one of the best performing altcoins in the last bull market. And if you compare that with Marathon, one of the major leading Bitcoin miners, in the same period down here from the COVID to the top, when it reached $84, this went up over 236 times. And when I did my analysis on all the Bitcoin miners, then pound for pound, they performed much better than the altcoins. And this is the reason why I've got the Bitcoin Miners Club that we've set up, which covers all the news about the Bitcoin miners and the leverage play. And currently I've been going through quite a number of swing trades with the Bitcoin Miners Club, and I have a current swing trade on Stronghold, which is one of the actual smaller Bitcoin miners. So if you want to make a comparison with the Bitcoin miners with what's currently happened with the Bitcoin price since we bottomed out at 15,400, Bitcoin has actually gone up to the current price at around 28,000, it's gone up 83% over here. While the Bitcoin miners portfolio that we've got running on the Bitcoin Miners Club, so far we're up to 115%, so much higher. However, As I've mentioned many times over here on this channel, as well as on the Bitcoin Miners members group, the two faster horses, Marathon and Cypher, one's up at 285%, and the Marathon is up at 110%. But there are others like Iris Energy, which is up at 159%. And this is a position where the miners are really very seriously lagging behind what you would expect in comparison to Bitcoin. So I would expect these figures to be in the 900 and 1,000 and 1,100 and 1,200% increases going forward before even the halving next year. So we'll see what happens, but if this is the kind of thing you're interested in and you want to join the members group, then you can join by clicking the join button below all of my videos, as well as in the description below all of my videos here. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.